Alright guys, welcome to another Strivemont video. Today we're going to be talking about call options and how I use them to make money in the stock market. For those of you who don't know, call option gives you the right to buy 100 shares of the stock at the strike price by the expiration date.
Oh my god! Wow!
No, I didn't just read that from the Robinhood app, but let's get right into it. So for today's example, we are looking at Microsoft. And you want to have the chart set up in a 4-hour so we could get an overall sense of where it's heading. Now we do see it making higher highs, however we did have this huge sell-off at 232, followed by 2 to 3 weeks of consolidation. So how do we make money off of this? Now we've been trading in a range that has a support of about 200 and a resistance which looks to be around 213, 214. Now these aren't accurate, but they do give you a sense of what the range is, right? We see how it bounces up and down, and then what happened is we broke the 200 level, tested 195. However, the bulls came in and lots of volume, pushed it above the 200. Now that shows me that we're probably not going any lower than 200 just because of the amount of support there. And as I can see, we started making higher lows followed by higher highs. Now what we could do is draw a channel. This marks the higher lows, which we see here. So that's getting the higher lows, and then we could do a higher highs. And what this is called is basically a channel. And we've been going up, testing the upper channel, then back down to the lower channel. Up to the upper channel, back down to the lower channel. Now we did reject the SMA line. However, this is because Trump got the coronavirus, and a lot of people decided to sell because of it. Because there's a lot of uncertainty of what's going on, and just a fear of how the market will react to Trump getting the virus affected the stock price. Now, do I think it's going to go any lower than that? No way, right? This is definitely just an overreaction, and it's going to bounce off easily. Now, how do I make an option play based off of this? We drew the lines so we know what the direction is right now. And as we can tell, we do have earnings coming up on the 21st. Now, we do know because of earnings, a lot of volume and momentum is going to step in. That's because when it comes to stocks like Microsoft, Apple, a lot of people are very bullish on it and they tend to rally before earnings. So we're going to make money off this rally. Now, because of this channel, we're testing the upper channel, then a lower, upper, then lower, upper, and then lower again. Now, come Monday, this candle is either going to be below this lower low over here of 204.79, or it's going to bounce off of the channel and start to go for a higher high. If it does break below this channel, I would say we test the 200 level again. However, I really doubt that will happen because this is just because of the sell-off with Trump, and we have a reverse. So let's buy the option, right? Now, looking at the Robinhood, the way I like to buy options is about 15 days out, right? I'm not buying October 9. By the way, it's October 2nd today. I'm not buying October 9 calls. I'm not buying 16 calls. Going at least 3 weeks out. So we're playing October 23rd, and we're going to go 210. Why do I say 210? Because if we're making higher lows here, from 205, we're most likely going to hit 210 or even more, right? My price target right now is 215, which I could see happening very easily, especially if we break out over here. If we break out of this resistance, which I think it will happen because the earnings is coming up, a lot of volume is going to come in, we're going to probably at least fit 215, right? So we're going to place our call for 210 on October 23rd. Now we got the delta of $43 right now, so basically every dollar Microsoft makes, we make $43 on our contracts. Now as we get closer to strike price, the delta starts to go up, so we make more money. But as we get closer to the expiration, the data as well starts to go up, so value starts to go down a bit. Now, that's the option I'm buying, right? October 23rd, 210. Now, for some of you who only could buy, you see $540, and probably you only have $600 in your Robinhood, you're wondering, I would rather go buy like two $15 calls because they're $300, right? But trust me, just because it's $540, you could easily make $200 off of it. Microsoft is gonna run to 212, no problem. You can make at least 100 or more off these contracts, even if it costs you $540. All right, so now another piece of advice when it comes to options: sell whenever you're comfortable with your profits, right? Once you make at least 100, 200, just sell it. You don't need to hold it. You don't need to play earnings too. Like, that's just as risky. If shit hits the fan, you're risking a lot of premium on your calls, and matter of fact, you could lose everything. But if you play this run up, you could easily make $300-$200 depending on how much contracts you buy. On that note, I'm ending the video here, and if you guys do have any questions, let me know in the comments below. If there's any other videos you would like to see, let me know as well. Leave a like, a subscribe, and also I'm thinking about funding an account with 500. You could slowly scale it together, and I'll show you how I go about using options to make money. Alright, and on that note, I hope you guys have a good weekend.